Now, some people will say that all this is a bubble created by the multi-trillion-dollar stimulus package and the Federal Reserve printing money like crazy. I say, forget it. That doesn't work. Don't asterisk stuff. It doesn't help you. Congress and the Fed were doing what I call their jobs. They created conditions where some companies could thrive, but the companies that are truly thriving are the ones that worked for it. Apple, Microsoft, Amazon, Alphabet didn't get trillion-dollar-plus valuations. $2 trillion today in the case of Apple because of the Fed. And honestly, even after these moves, I can create a story which says that those stocks aren't that expensive. Of course, the other thing about the recent rally is what I mentioned last night. It is heavily weighted in favor of the tech stocks that Wall Street loves when the economy is stagnant. 5 tech companies now make up 25% of the S&P 500. That's hardly diversified. The strength in housing is very encouraging. The strength in tech, not so much. The most worrisome thing about this market, though, it's the continued weakness in the financials. They can't get out of their own way. They are so far away from their highs, it's incredible. Now, I would feel a heck of a lot better about the economy if the big banks were going up and the financial technology stocks were going down. I think the weakness in the banks is far more important than Apple hitting $2 trillion today, or the home builders rallying, or even commodities going higher, because it's about credit risk, and credit risk can really hurt the stock market. So let's put it all together. Is the market predicting a boom? It's possible, but there's one huge caveat. Whether we're talking about home buying or consumer spending, everything comes back to COVID-19. I'm going to give some positives here. See, if you believe Regeneron's new cocktail trial in partnership with Roche that was talked about this morning can cut down the death rate to much lower levels. If you believe that everyone will be vaccinated in 6 months because so many good companies are working on vaccines. If you think Congress will pass a second stimulus package to bail out the millions of people who've lost their jobs, not to mention all the small businesses in danger of going under until we get the vaccine, then yeah, we could be in for a boom. And it could be in great shape, that it being the economy, by next February. Me, I think it's a little more complicated than that. As I see it, the pandemic has caused some permanent changes in the economy. And if those changes aren't rolled back, you might not like where we're headed. Let me put it this way. If small business didn't exist, if all we had were Walmart, Amazon, Costco, Target, Home Depot, and Lowe's, if they were the only retailers that mattered, if we didn't have a huge travel and leisure and dining industry all supported by small business, then I would feel great about the future right now. But you see, small business is integral to our economic future. And right now, that's what's being eroded, if not being wiped out. That makes it a lot harder for me to be as optimistic as I'd like, because sooner or later, that pain will make its way into the market, most likely via the banks, which is what those stocks are telling about, which is why they're doing so poorly. The bottom line, yes, I think the economy is going to look better 6 months from now. But based on the action in the market, it's probably not going to be that great. I'll start believing in a V-shaped economic recovery the moment we get a V-shaped recovery in the bank stocks, but not before. Until then, the real boom will only come with a vaccine.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.